and welcome to today's fast-paced video, which is going to be about foremost incoming economic data, their implications, what it means for stocks going forward, and inspecting the lessons from the stock market's turn yesterday, because the buyers had managed to come back, and we will examine the clues, the sectoral and volatility hints that had been given along the way. Such was the daily chart in progress, and this is the picture following high volume rejection on the 15-minute candle that had been the rejection of almost 100% full retracement of the slide following a very adverse data. We can see that here, the middle one, the 50 period of moving average, the percentage of stocks had noticeably turned south, while for now the 20 had been resisting. This is quite a typical sign of momentum about to turn, and odds were in place. That's well before the key, be it Qualcomm, be it Western Digital, be it Meta or Microsoft earnings. This had been the marker hinting at best neutral finish to the day. This is how it turned on a closing basis, but remember that the ascent, the turn in these two indicators had been the result of, practically speaking, 3 15-minute candles well before those earnings had been released, and it was not spawned by any kind of positive tariff deal data or new interpretation, new twist, new details emerging, revisions, whatever, to the incoming very poor economic data. So this had been basically what had formed a bullish engulfing candle, which had not been as visible till the close. Compare that to the preceding situation, which bears the hallmarks of upswing rejection. So it had been making sense through the day at select points to be dipping on the short side with reasonably tight stop losses, risk exposure, because the clues, the bullish clues, had not been there, and they had not been supported either by data or by earnings. However, this is how market had decided to turn before the closing bell, and it had been further enhanced by the reaction to the data and failure to have any kind of retracement during the Asian session or early European sessions. Please note that it is highly untypical to have more than 50% miss in small and medium companies below 30% employees, which was what ADP employment change yesterday is about. Seeing a figure of 62,000 job creation is highly unusual and very underperforming. This is more than just the supply chains tariffs uncertainty. This has been further confirmed in really worse than stagflationary GDP data. Very solid miss coupled with price index, the advanced GDP price index being a very strong beat, almost some 20% above what had been expected, which is not even stagflationary reading. Yeah. So this had given plenty of reasons for us to see at least a 2% down day. And you can see on the hourly chart the struggles that had been made in trying to overcome Tuesday's intraday lows. It took several hourly candles and good attempts to go down, coupled with upswing rejection, and it had been only the positioning before the close during the power hour that had sent stocks from the neutral, doubting, guarded position, which had been characterized by still rather short-term leaning bearish, because this was the essence of why I favored this hit to stock prices to last for at least 24 hours longer than it did. Actually, it did last only 2 hours. And this was favoring neutral close. And remember who was reporting? Meta, which is facing antitrust issues, which is having antitrust issues. The chart, as we will see further on in this video, is very subdued. Microsoft, that was the sole one that did not raise capex spending, which is another indirect sign of caution going into these earnings. But both companies did beat, and market reacted positively to that. Sure, Tesla is bottoming, but as we will see further on in the sectoral perspective that I will show you, there have been plenty of risk of signs within the market, and volatility had not been all that clear during the daily spike about retreating. This was as well the job of the closing hours of the very finish to the session. So the picture mid-session around the 2/3 of yesterday's session had been still very mixed, and it's only today when we are seeing the usual risk on signs and willingness to build on positive earnings momentum by these tech companies that I had mentioned. Such is the sectoral view. You can see that staples clearly outperformed discretionaries, and Tesla is in early signs of fresh uptrend following a protracted basing period, and still this is the best that discretionaries could do. So you see as well that financials, not just on this daily perspective, but on the 5-day one as well, had been quite a badly lagging sector, which is not what one would expect given that yields had not been rising. So this has yields not rising has positive effect on bank balance sheets, and we did not exactly see that translated into financials. And open the V-Bull chart, open the Hood chart, and those are not in a raging bullish position. So high beta, which was a very reasonable assumption to make following yesterday's data hit, was bound to underperform yesterday, and tech as such did not have a stellar day either. The leading sector, healthcare, is a clearly defensive one, and real estate had been doing okay. Those home sales figures came in positive, but still it had been very risk-off day. yields. There had been even a rejection in their descent further on, meaning on the medium to long end. It has been only the short end, which is as well highly typical of risk of situations in the marketplace. So this had been as well an oddity which had not per se favored a steep ascent into the close in stock prices, notably led by tech names. Only there has been some very modest US dollar stabilization, but still there is struggle around 100 level, and the more needs to happen on this front. Taking those two most important stock market companies that have been reporting yesterday, Microsoft is not really a bullish chart, and similarly to what I had shown you in S&P 500, this one did not have such a long hammer reversal candle till the buying spurt in the power hour. So this has not been a clear-cut case of bullish positioning for those earnings building up during the session, well supported by incoming data. No, this has not been the case, and Meta had been even more subdued, and in my view Meta is in a better position as a company, even should it be or shouldn't it be in the end forced to spin off several great products. So much for the anatomy of the flip from, say, very bearish to neutral, and it had been having good odds to be really neutral till the close situation in the stock market, further alleviated by good earnings, and now we are building higher with good prospects to continue, no matter what we think about tomorrow's non-farm payrolls, and it will be the subject of tomorrow's video. So thank you for liking this one and listening to it in full. Join page will help you solve what's right for you based on what and how you trade. Full daily analytics plus premium intraday channels are the ideal way to go.